Welcome back to the Daily Nugget, Property Insights, one topic, 20 minutes or less. Myself, Lawrence Lotze, and today joined by James Blair, a financial advisor. And James, the question to you today is inflation. It's obviously big at the moment across New Zealand and the rest of the world. And I'd love to know your thoughts about inflation. But let's go to a real simple question straight to the bat. What is actually inflation and what is the current rate we've seen across New Zealand?
Yeah, thanks for having me, Lawrence. So inflation's a very normal thing. It's just getting a lot more attention at the moment for a variety of reasons. Some are easy to understand, some a little bit more complex. The way to think about inflation is you have a basket of goods. So that might be at the supermarket, it might be when it comes to petrol at the pump, it might be to do with kind of your daily living. And over time, is that basket of goods the same price it was last year, or has it increased um, over 12 months? So the Reserve Bank tries and keeps inflation between 1% and 3% over the long term. Over the last 12 months, Lawrence, 6.9%. So that is what has led to, the supermarket inquiries, everybody getting ripped off, talking about things happening at the petrol pump, employment inflation, salary inflation. That's a big one. Rents increasing, whole range of things that are impacting us at the moment.
So it's crazy to think that in the last 12 months, everything in a real simple way to think about it, anyone that's listening, watching, everything's cost 6.9%. Let's just say 7% more expensive than it was a year ago. But fundamentally, it doesn't mean that you are earning in some instances that 7%, or more and so forth. How would this, from inflation at the moment, how would this impact your thought pattern around investing, property, or any other sort of investment types you might have in your portfolio?
Yeah, quite a few different ways depending on your situation. One that I'm talking to lots of people at the moment about is, say you've got a mortgage on your own home, or maybe you've got an investment property with a mortgage attached, but you also like to have a Sharesies account or regularly invest into an index fund or do something along those sort of lines. With inflation kind of moving up, interest rates on mortgages have moved up as well, which has made people go, is it better for me to pay down my debt, or should I be looking to invest somewhere else? That's one impact with investment strategy. The second one is everything's more expensive, right? So that means that you have less spare money to look to invest to either pay down debt or grow your wealth. There's a lot of families out there that are just trying to get by.
It is so true. I mean, and again, it's something that people didn't realize. Like you said, is you might have it at core. I've got one house, and I like my shares. Like in New Zealand, right? I buy my dollar shares, and I'm spending my $50 or $100 a week. I used to call it my coffee purchases. I had a strategy where I would stop buying coffee every day for $5, and I'd take that $5 and buy in shares. Right, it was a strategy I had a couple of years ago. But it's the thought pattern definitely at the moment that, hold on, is that $5 better suited for me actually paying off my mortgage instead of $5 a day in the share market, because my interest rates have gone from 2.25% a year ago, and some of them are going to click over 5% when they come off in the next couple of months, and therefore understanding how better my money is spent in that instance.
Yeah, it's definitely something that if you're not thinking about it, you shouldn't panic about it, but you should be thinking, how is this going to impact me? Whether it's the cost of the groceries, the cost of the mortgage going up, or does my investment strategy still make sense when it comes to investing into shares? Because say you make an 8% return on a share, you take off tax, maybe you're at 6%, you take off inflation, and then you go, there's not much left at all, or I'm almost going backwards. So you need to keep those considerations intact as well. But the other thing to point out, Lawrence, is 6.9% inflation is not going to hang around forever. That's not a sustainable number. And there's already some people who are thinking that so inflation is kind of recorded quarterly in New Zealand where the numbers come out. There's some people who already think maybe the next quarter might be higher, or we could already be kind of peaking out and pulling back a bit. And that's for a variety of factors. Some is kind of the supply chain issues with COVID. Another one is as interest rates go up, there's less people with discretionary money spending. So those numbers will kind of come back over time.
Now, an interesting one. I'm going to throw you a little bit a curveball question around this one, James. Is obviously inflation. Let's say the previous quarter was, previous quarter reporting was 6.9% annualized. In New Zealand, we've gone and done a whole lot of I want to call it cashbacks and buybacks and schemes to cost things less for people day to day, right? So there's the petrol tax that they've reduced. Supermarkets have taken like the top 100 items and reduced the cost and that sort of stuff. Now, this does have an impact on our day to day spending. By all means, every one of us is happy that these are there, so I'm spending less. Does the next quarter, just as I don't know if you can give me clarity on this, but will the next quarter be lower if it's lower, but needs to take into consideration a lot of these cutbacks have happened. So it might look like inflation's going down, but the government still has to put the tax back. The shops still have to put their margin back that they cut us back to save us a little bit of money going into winter. So I'm wondering in the next quarter how reflective that new inflation rate is actually going to be.
Yeah, I mean, it's a good question, a good insight. One thing to keep in mind though is, and the government's tried to make this quite clear from their perspective,
Yep.
is they're not in complete control of what happens with inflation. If they completely, I don't know, raise interest rates to really high numbers and lock things in, it does not mean that inflation doesn't exist. A
Yep.
perfect example is you're building a house, right? How
Mhm.
much of the materials for that house come from New Zealand versus overseas? Does New Zealand have any control over the cost of jib, for
Yep.
example? So while some of the numbers, whether another example is transportation in terms of
Mhm.
trains, the discounts on those, and people having a little bit more money to spend to that coffee owner that then gets passed around the economy. Those things, if you give people more money and then add back the cost later, yep, that will have an impact. But a
Mhm.
lot of it is to do with what is happening overseas. With example is between Ukraine and Russia,
Yep.
are huge exporters of goods around the world, which have an
Mhm.
impact. And then obviously COVID with its supply chain issues. When those things sort themselves out, which will take time, that will have quite a big impact on inflation numbers.
Yeah, awesome, James. And once again, thanks so much for the insights on the Daily Nugget, property insights. One topic, 20 minutes or less. And as always,